Good morning. We will start the morning call. Uh, US markets were flat yesterday. Technology stocks saw sell-off, which led to decline in the Nasdaq, while Dow was up. Asian markets are down 0.5% this morning. Yesterday, some data came out of US regarding construction of new homes, which dropped below expectations for the month of May as builders pull back on new residential projects, largely in response to high interest rates, which reinforces the concern about stubbornly high housing prices. New housing starts fell by 5.5% last month, which is a sign of more cracks in the already shaky housing market. Uh, Also, we should recall that mortgage rates stood at around 3% exactly 3 years back in June 2021, and currently they are at 7%. So naturally, that will have a big toll on the demand side, and not only the demand, but the high interest rates also is raising the cost for building new homes for the builders. In other news, overnight, the Swiss National Bank cut rates for a second time, while Bank of England opened the door to an easing in August after holding rates steady. That's why sterling and Swiss franc, uh, along with euro, fell, lifting the dollar. Uh, After hitting a low of $77 per barrel, Brent crude is slowly inching higher, and currently it is at $85. FIs continue to buy in the India market for the fourth continuous day. I will now invite the technical team to take the call forward.
Yeah, thank you, Jiran. Good morning, all of you. See, yesterday index ended slightly higher after the volatile session. Today we expect open a flattish note and remain a sideways stay and within the range only. In technical ground, Nifty has a immediate support around 23,500, and if Nifty break and close below, then we expect further profit booking and maybe further sell up towards 23,440 and 23,370. 370 is a major support for index. Upside 23,640 and then 23,700 is a major resistance. We see the last few trading session, the Nifty facing an upside. Bank Nifty also trading in upper range and close above the important level yesterday. Also, we saw that this momentum to be continued today. First immediate resistance place around 51,970 and then 52,200 in upside. But first major support for intraday 51,370. Below 51,370, then we see some profit booking in towards 51,000, and below that 50,770. So both index trading in upper range. We see the first half an hour is managed to sustain this level, and then we expect further rally. Otherwise, we see some sideways momentum. If Nifty break the support zone, then we expect some profit booking. Finity also managed to sustain about 23,000, and next immediate resistance place around 23,120 and then 23,220. First immediate support place around 22,860 in Finity. So all three index trading in a positive range, but we closely watch this weekdays, last Friday. That if Nifty managed to close above weekly in upper range, if below, then we expect for next week in some profit booking index. Stock specific, Atul looks positive. We saw some positive momentum last 3 to 4 trading session in Atul. This continue in few trading session also. Then NBCC also looks positive around 162 range, and we expect this momentum towards 180 and then 190 in upside. Downside 156, 154 is a major support for NBCC. Indian Hotels also looks positive at current level also, and we expect this momentum to be continue in Indian Hotel. Sell side, Bharti Airtel again looks weak in technical parameter. So we expect this weakness to be continue in Bharti Airtel. Second, Cipla also showing some profit booking in upper end. Do we expect this downside momentum to be continuing Cipla? Downside 1500 is a major support for Cipla next. So we expect this pressure to be continuing Cipla. That's it for technical derivative I can carry.
Yeah. Thank you, Vikas. On the derivative front, nothing major has changed from yesterday. Only thing is some liquidation was seen in calls, which had built up from 23,500 to 24,000 levels, which is a small positive. Other than that, nothing really. Now your stop loss for longs does change to about 23,450 odd, and you can continue to hold on to longs up to that 23. 824,000 levels, which looks like the overall target for Nifty for now. So yeah, that should be the target as of now. From the stock specific front, fertilizers continue to do well. We have seen a lot of short covering in Chambal. There's a price volume breakout as well. Very likely this stock can move up further. There is a likelihood this stock can go up to 600, 620 odd levels. So look out for the same. Even Coromandel and GNFC, they've done well. So fertilizer as a pack is doing well, should continue to do well even for today. So yeah, look out for the same. Other than that, banking sector stocks should continue to do well. There is an important breakout which has come in, which can take banks upwards. So another 3-4% up move in most of the stocks is possible. Private sector banks are better at this point, so focus on the same. Yeah, that's it from my side. Like to ask the fundamental team to take over, please.
Yeah, as such, there is no news, no, but just continuing with what Nirav said. So given fundamentally, if fund managers today want to, deploy money, then this is one of the few sectors, banks where valuations are still below the last 10-year average. So that is one sector where the valuation are still in the same zone and probably could attract buying from institutions. Thank you.
Good morning. Today, one IPO is opening, Stanley Lifestyles Limited, and it is closing on 25th of June 2024. The price band is set at rupees 351 at lower end and rupees 369 at upper end. The issue size is of rupees 537 crore, which consists of fresh issue worth rupees 200 crore and rupees 337 crore worth shares are being offered for sale. The company has started its operations by providing car seat leather upholstery services for leading global automotive brands. And subsequently, it has transitioned into retail luxury furniture in India. The company is mainly catering across three key customer segments with its respective brands, such as Stanley Level Next for ultra luxury segment, Stanley Boutique for luxury, and Sofas and More by Stanley brand for a super premium segment. The company has a pan-India presence, although approximately 82% of revenue is coming from southern India, mainly from Karnataka, where it is having more than 62% of the revenue. It has two manufacturing facilities located at Bangalore. Company is coming up with an IPO with an object of opening the new stores, anchor stores, and the renovation of existing stores under the formats of its various brands. Also, to fund the capex requirements of the purchase of new machinery and equipment by the company and the subsidiary. Stanley has gained a significant market share throughout its journey of the last decade, and it has a long-term vision to be available across customer segment at all price points. During the FY21 to 23, it has delivered the revenue growth of 46% CAGR and EBITDA growth at 67% CAGR. While based on its 9-month FY24 performance, if we annualize it, one can expect flat revenue growth for FY24. In terms of profitability ratios, companies ROE and ROCs stood at 14.7% and 16.3% for FY23 respectively. It expects organic growth of 25 to 30% over the medium term. Also, in terms of localization of raw materials, currently it is sourcing the raw materials through imports from Europe and Southeast Asia. And in terms of localization, it has started sourcing from the domestic markets, where currently it is at 20%, and it aims to increase it up to 70 to 80% over the next few years. So this is expected to have a positive impact on its overall earnings. There are no listed peers in the furniture industry in order to benchmark and evaluate the fair valuation of this company. However, we have considered a few players from the premium business model, such as Vedant Fashions Limited and Sheela Foams. Company is valued at 30 times of EV by EBITDA based on the annualized 9-month FY24 EBITDA, which seems to be looking at discount when compared with with these peers, which stands at 38 times. Thus, we recommend subscribe to the issue. Thank you.
Good morning. Yesterday, global IT consulting firm Accenture reported its third quarter FY24 results. The revenues went down 1% year on year, and the company even has narrowed down its full year revenue guidance to 1.5 to 2.5% from an earlier of 1 to 3%. But this was above expectations. Street was expecting higher cut in the guidance. So Accenture follows a September to August financial year. On the positive front, Accenture is expecting its consulting business returning back to growth in next quarter, and bookings to revenue conversion is also expected to improve gradually. The main highlight of the result was the new order bookings at $21 billion were up 22% year on year, and its Gen AI new bookings jumped 50% quarter on quarter. And the company also added around 8,000 employees during the quarter against a trend of a declining trend in the previous quarters. So positives outweighed the overall result for the company, and stock closed 7% higher. So this would be positive for the Indian IT firms as well. Thank you. Commodity team can take over.
Yes, thank you very much. Good morning, everyone. So in today's session, we are expecting some profit taking in gold and silver as prices had rallied yesterday. So overall view remains bullish. Buy on dips is the call. One can initiate a buy in gold around 70 to 450 to 350 levels, and maintain a stop loss of 70 to 100. On upside, 80 to 850, 70 to 850, 73,000 is the level where some profit taking is expected. So watch out for that. Similarly, silver also, one should initiate a buy around 91,000 and maintain a stop loss of 90,200. On upside, it should test 92,500 to 93,000. Similarly, in metals, we had witnessed a rally yesterday, and some profit taking is expected. Copper, one can expect prices to test 857, 856 on downside, whereby again one can initiate a buy with a stop loss of 852. On upside, again it can test 862, 864 levels. Zinc also, prices are facing a resistance area at 263. So for trading purpose, one can initiate a sell with a stop loss of 264. Some profit taking till 260, 259 is expected. One can also initiate a buy around 259 with a stop loss of 257. And in crude oil, prices could consolidate from 68.20 to 67.50. So pricing, trading within this range is recommended. If prices sustain above 68.20, then we might see for fresh buying. Else one should wait for a dip around 67.20, 67.50, and initiate a buy. uh, Natural gas prices, yesterday we had witnessed a correction, and we are expecting prices to test 220, 215 on downside. So selling on rise around 235 is 233 to 235 is recommended, with a stop loss of 242 for the downside target of 220 and 215. That's it from us. Thank you very much.